Good morning. It is Tuesday. It is the Bubba Show. And today, since we've been bringing up different topics every week of what to talk about, and since I've been calling for it for a while, I want to talk about corrections and what they mean for the overall market. The first thing that you want to understand about a correction is it's not necessarily a bad situation for the market. Markets need corrections, as I like to call it, for the health and the wealth of the market. When we got into this what we call the tortoise bull, and we were grinding higher every single day, really what did that do? It took away the opportunity for traders to make money through volatile times. Traders make the most amount of money when there's high volatility. What has to happen here is the markets and the charts and the whole situation needs to be able to reset and come in. We've gotten so many charts that have gotten so far out of whack, and then you get the straight line up and then the straight line down. We want to see direction. So a 6 to 10 to 12% correction here in the market would be very healthy for the market. Now, when the corrections happen, if news changes and it changes from a correction to a bear market, that's when the issue becomes. But the actual correction is actually important for trading. It creates more market action, it creates more trading availability to us, and gives us a better chance to make more money. And after all, why are we trading? We're trading to make money. So when we look at a correction, don't look at it as a correction as something that is disastrous or bad. A bear market would be bad. A sign of deflation would be bad. Those are what we would be concerned about. But for now, a simple, let's just say 10% correction does not do any harm or any major damage to any of the markets. We want to see a correction because what it does allow, it allows the charts to reset themselves. It clears up the footprints and gets us out of the habit of everybody just saying, well, buy, buy, buy. That's why we're looking at a correction. That's why this market is in a bubble sort of territory. These are all the reasons that we look for this. And this is when you talk about overbought and oversold conditions. The market is not really overbought here. What the market is telling you is that the money flow is going from one sector to another sector, and a lot of the money is coming out of the market. And I don't want to hear that there's market money on the sidelines, because there's been money on the sidelines for the 35 years that I've been trading, and that's always going to be the case, because if a market is good and solid, there is always money. But when you look at the correction, don't think of correction as bad. Think of a correction as simply a function of the market that we have to go through. It's just like your digestive system. It makes you feel better. You have to let the market correct to allow yourself to find better trades to make. Remember, I want you to check out the Average Joe Options call on Monday night. And if you need some information how to get there, email me at todd@averagejoeoptions.com. For Tuesday, the Bubba Show. We'll talk to you on Wednesday.